So what would you say? I'll put you on the spot a little bit. What somebody comes up to you and say, "Hey, Vaughn, what interest rate term? What term should I be picking? Is it fixed? Is it variable? Is it 5-year fixed? Is it 3-year fixed? 2-year fixed? What's your call right now?
Yeah, all of those for sure.
You do them all? Give
You
me
know,
one of each.
if it's an insured purchase, right now I'm staring down a nice juicy discount on the prime rate. You know, you get a prime -1, prime -0.85 on the insured side. That's tremendous. On the uninsurable, you know, if the purchase price is over $1 million and you have that 20% down payment, I don't know. You know, I think it's if you're buying today, maybe it's a shorter term. Because like what I'm seeing out there for variable rates is like a prime -0.5. If you can get a little bit better of discount than that, I'd be pretty happy. At a prime -0.5, I'm not 100% sold, but could be 100% sold. Well,
Yeah.
what's your on the
Yeah, I think
uninsured?
I'm in the same boat.
Yeah, you
Yeah,
got
I
to look
think
at
if
what
I'm
makes sense
looking
for the
at
future.
it
If the prime
depends
rate
on the
goes down to
borrower.
4.2 and you know then you're a sub 4 with your variable, but on the insured side, well then you're like getting close to a 3% interest payment, which over the last 2 years is tremendous.
Yeah, I think that it depends on the borrower, right? I'm leaning more heavily towards 3-year fixed rates than I am towards 5-year fixed rates. Just with the penalty is much higher. Life happens in 5 years. You never know what's going to happen. So I'd rather put somebody into and personally pick a 3-year fixed
Yeah.
rate right now, unless I'm getting, mid 3% on a 5-year. That's where I'm probably leaning over to the 5, but we're not expecting that fixed rates are going to drop that dramatically over the next little while.
No, certainly
So
the short-term forecast is that the fixed rates are kind of like what you're looking at, which is there's some comfort in that too. Like if you're renewing into a fixed rate right now, you're probably not going to wake up in 6 months and all your friends have a better deal than you, right? Because that's the
right.
real, uh, hair-pulling frustration is that when all your friends get a better renewal rate than you, but it's probably not the case, right? So
No.
we can relax a little bit about that, even though you may not relax so much about the extra few $100s a month in mortgage payments.
Yeah. Yeah, I agree. I think that the 3 year is probably if I was nervous about what's going to happen, and the future is cloudy when it comes to the political landscape, at least in both Canada and the US, then maybe I'm doing a 3-year fixed rate. The rates are similar to what you would get in a 5-year, and then you're not locked in for two more years.
Yep.
But there's still a year left on the Trump administration in 3 years, so maybe you are. Who knows what's going to happen in that time frame?
And look, if the variable rate discounts, if you can get sort of prime -0.6 or better, then I think you're in good shape. I've said that we're going to take some massive nosedives in terms of interest rates, and maybe we have, in terms of the Bank of Canada lowering interest rates because we had, consecutive 50 basis point cuts. That's pretty significant. Like a full percentage point over a couple months is that has
Yeah.
it fallen off fallen off the cliff yet? As I expected, no. Is it going to be a little more gradual right now? It seems like, but we're sort of one major event from the thing falling off the face of the cliff. Historically, our overnight rate, our prime rate, has been lower than what it is right now. So I think that's where we're going.
All right.